Very good morning, and time is at about 8:15, and today is August 1st, and which is first start to the new month, and today is Nifty expiry. Yesterday we had monthly expiry of Bank Nifty, and then today is Nifty weekly expiry. I think the first week in August, and let's see how the day would really shape up. So as of now, I'm tracking Nifty. Yesterday, before I go to Nifty, yesterday there was a very big news. The Fed rate cut obviously did not happen. And then now I was watching live yesterday night. So it's important to understand what is this Fed rate cut and how it's going to really impact pretty much the global markets, right? But having said that, yesterday NASDAQ pretty much went up almost like 3 to 3.5%, and there was some pullback later in the day, but overall it was a great day. And then a lot of, for example, Nvidia, as you can see here, it is up by almost like 12%, and there was some pullback on Nvidia a day before that day. I have very small exposure to US stocks. I do not really track actively because it's not worth tracking, but then definitely Indian markets have some bit of an impact from the US market. That's the reason it's always good to track some of the global cues. And interestingly, today, Nikkei had fell down quite a bit. I think, again, there was the fall is related to the rate cut there itself. So I'll come back to Nikkei a little later. But right now, not today, but then probably some other day. But as of now, Nifty, as it stands today, this is the one which I'm tracking for. Maximum is at about 25,145, and most probably is at about 25,026, and least probable is at about 24,951. These are all two standard deviation. And then yesterday Nifty, because of the Bank Nifty expiry, there was quite a bit of the volatility, but then I believe it's pretty much ended wherever it started. Yeah, I think from the day opening, I think it's pretty much stayed in a particular zone or the range. So there is not much of a change there. And also, if I quickly go back to the open interest, at this point of time, there is massive support for Nifty at about 24,500. And then there is definitely some resistance at 25,000. And then once it breaks, I think there are two obstacles here. One is 25,100, and then second one is 25,200. I think those are all, my wild guess, it would be, it may not really cross 25,200, but then we never know what's going to happen. But this is my most probable scenario. And if it expires below this, I think there could be some pullback next week or so. Right now, it is Nifty is again all-time high, I believe. Let me just check the one-day chart and then see where it stands, right? So Nifty, I think a little short of, it is all-time high because this is the previous close here was 24,386, and this was on this was on Monday. And then yesterday it closed at about 24,951. Yeah, technically it is all-time high, little above the previous all-time high, about 36, yeah, about 20 points or so. Not even 20 points, 15 points or so. Not too much of all-time high, but then it tried to breach the intraday all-time high, but then I don't think it actually reached there. As of now, intraday all-time high is at about 25. Let me get the exact number. Intraday all-time high is 24,918 and exactly 25,000. And yeah, it couldn't really reach. But I think let's see today if it is going to breach or not. Irrespective, I think as of now, Nifty looks quite bullish in nature. And I saw GIFT Nifty as well. GIFT Nifty obviously is thriving quite a bit, and I'm not sure why, but let's see how the things would shape up. And there was one, but otherwise the day looks quite good. GIFT Nifty is absolutely positive and it is still thriving. So yesterday, I believe it closed at about GIFT Nifty yesterday. Yeah, yesterday it closed about 25049, and then as of now, it's close to it's about 64 points up or so. I think that's definitely a good performance. But then, yeah, we need to see whether the day is going to sustain. But I'm going back to my previous conclusion, right? So using the 15 minutes candle here, I think a good day seems to accurate, 90% accuracy, but then I'm accuracy. But let me, yeah. So these are the numbers I'm still tracking. And as if there is a gap up or gap down, mostly gap up, I think these numbers will slightly change. And as of now, yeah, I think that's what it is. And yeah, this is my status of the positional trade. And I think some of you are following this positional trade, right? So as of now, after the previous one, I did not make any changes. At this point of time, I'm at losses of about 23 minus 9, I think, close to about 16,000, I think 16 or 15,000 losses. And this is anyway under day's loss. So probably today's move might have some impact on the PE, but I'm not going to close CE at all. So I'm not expecting Nifty to really go on and hit 26,000 CE, at least in August expiry. It might probably hover around 25,500 or so. So I think this trade is safe to me at this point of time. I'm not planning to make any changes unless I make some money on the PE today. Maybe if there is a absolute gap up on the PE side, I will probably exit this and then wait for some time and then again re-enter. That is the only change that I'm going to make. But generally, positional trades are a lot more easy. And if we are able to understand how to do the adjustments, and it is usually easy to make about 3 to 5% in a month. And as I said in my previous video also, not every month will be profitable. On average, in a month of 12 months, and on an average in a year of 12 months, if you're able to make 2 to 3% each month, that itself is 24 to 36%, which is a quite massive returns. And 3% in a month looks quite small if you really look at the absolute number, but that's a good number to start with. So as of now, I have used very less capital in this account, about 27 lakhs. But then once, in fact, next month onwards, I'm planning to move most of my capital to positional trades, not necessarily day trading, because day trading became quite volatile and also became very became like a gambling, to be honest. And it's some of these unnecessary spikes and manipulations. It's very, nobody can predict. So when they're going to happen, the only person who knows that there is going to be something coming up, the people who are doing the manipulation, but nobody else can actually do it. And my view, generally we always say it is intraday is a bull versus bear fight, but it is not. It is probably same person would be playing both the roles. It's not two different people, and that's what I believe. Maybe some of you may agree, disagree. That's all right. But this is what which I had seen earlier when I was not doing options. I always wonder why there is a lot of volatile movement within the day. Sometimes you do not see absolutely any reason. Ideally, if let's say, for example, take the HDFC, right? So if the HDFC, for example, if the bank is doing good, ideally within the 8 hours or 6 hours, nothing is going to change. There is no meaning HDFC, for example, going 1% up at 12 o'clock and then 1% down at 2 o'clock. It doesn't make any sense. So now that actually concludes that there is absolutely somebody sitting and doing buying and then selling illicitly. So that's what the manipulation. So as I said, day trading, especially expiry days, became quite challenging, and both the monthly and then weekly expiry. I do not want to really trade when there is a lot of manipulation, speculation, right? So that's the main reason. But generally, in a broader level, it's very difficult for someone to manipulate a stock price unless it is fundamentally right. Obviously, even those stocks can be manipulated anyway. But then generally, if you have a good fundamental stock, and then if you are holding and then long term, I do think it's going to give very good results. So my positional trades, I'm actually planning to do mostly stock centric. The reason is I have a portfolio. Even if I do covered call against some of the stocks, I would still be making some money. I'll mostly explain with a real example. If I tell theory, I think it will not stick with people. And okay. So I do not want to explain positional trades with theory, but when I start the positional trades, I will definitely do a video specific to stocks, mainly the covered calls. But before that, let me quickly explain what it is Fed rate means, right? It's very important for you to understand a theory behind this and also bit of the practicals behind this, right? So generally, I think most of us know, I think all of us experienced anyway. So there is a COVID impact. And then if you really look at Fed rate cuts, Fed interest rate actually gone down quite significantly during the COVID time. The reason was the rate cut is technically an interest rate, right? So interest rate, again, this Fed rate, very similar to RBI, is more of a suggestive interest rate cut. So generally, it doesn't force the banks to do that, but then most of the banks would follow this kind of a rate cut. So as you can see here, right? So during the COVID time, it's not 0%, but at least there would be very negligible percent, right? So the reason COVID time, pretty much the economy was down and people are not earning a lot of money and they're not buying anything. So that point of time, the only way to induce money into market is giving loans to the people. And then obviously, if you have a lot of interest rate to pay, nobody will take the loans. So that point of time, Fed or RBI would actually decrease the loan rates and then the interest rates either, so that a lot of people would take money. When they take money, they'll go on and buy some things, and then eventually it would boost the economy. When the economy grows, and then people tend to get more jobs, and then that's what really happened. That's the reason there was a rate cut. But eventually, what happened was when the rate when there was absolutely no interest rate, a lot of people started taking money, and then there is quite a bit of impact to the inflation as well. And US, in fact, saw quite a bit of an inflation in the last 3-4 years, right? So let's do US inflation. So as you can see here, the inflation, in fact, was hovering at about, it's very difficult to follow this. And this is 2020, which is predominantly the COVID first hit, right? So the inflation rate has increased quite significantly. And as you can see, it's hovered around 9.06 at the peak. And I, in fact, traveled to US a couple of times in this period. And then at least my friends in US, they say that the car prices have increased, and then the home prices have increased, and also the home rents have increased. So I think that really caused a lot of concern to the people. And then generally, the inflation, in fact, started tapering down as we proceed here, right? But right now, the interest rate is also definitely higher. The reason interest rate was higher, I think the last rate increase happened on July 26, 2023. Now, Fed wants to make loans not so interesting to the people. So here, even people do not take a lot of loans because there is a higher interest rate, the inflation automatically comes down. The reason is people do not have a lot of money to spend in the market, and so the prices also will come. I think that's the logic and the theory behind the Fed rate cut. So let's say next time when Fed in fact cuts the rate, let's say 5.52, for instance, let's say 5.255, which means that a lot of people would take more loans. And then again, that will have some impact on the inflation. So right now it is about 2.97 as of June 30th. So it might probably go to 3.27 or 3 or whatever. I think around 4% or less than 3% would be definitely a good inflation for a country like US. So I think that's all. That's about the Fed rate cut, and then that impact. And then generally, if let's say rate cut happens, it might probably boost the economy, and so there could be some positive impact on the stock prices anyway. But then right now we might argue, though there was no rate cut, why the market in fact did not fall. The reason was this was anticipated, and also US elections are coming up in November. But then there is a speculation that the next rate cut announcement would happen in September, and there is most probably Fed would do the rate cut in September meeting. I think that's the news at this point of time. Have a great remaining day, and then happy trading if you're doing, and then I'll resume my trading on Monday.